Hello, today I'm joined by Guy Anderson, fund manager from the Mercantile Investment Trust. This is an investment trust which invests in UK companies it hopes will be tomorrow's market winners. Hi Guy, thanks very much for joining us.
Good afternoon.
So Guy, a lot of your holdings are UK companies which do business in this country. The OBR says the UK should avoid a recession in 2023 and consumer spending seems to be holding up. So why hasn't the FTSE 250 index moved higher this year?
So that's a great question. And of course, it depends on our starting point in terms of the progress of the index. And I think it's actually particularly interesting at the moment because if we compare where we sit today versus the start of 2022, for example, so before the invasion of Ukraine, the FTSE 250 is down around 15%. But of course, at one point back in September, October of last year, we were down about 30%. So over the last 6 months or so, the market has moved on quite substantially. But over the year to date, it has been generally overall flat. And I would say we've got a confluence of events happening at the moment. First of all, primarily there's the concern about the outlook for economic growth. But then below the surface, we've actually got quietly a bit of an upgrade cycle happening in terms of the outlook for UK economic growth, and you touched upon it. And so I think we've got a number of competing factors at play. Ultimately, if companies continue delivering as they are today, then I think we should have a very constructive view.
What types of companies are you looking to invest in? Are you looking for certain qualities in a business?
Yes, very much so. So first and foremost, we want to invest in what we think of as structurally sound businesses. So these are good businesses that have good profitability and that operate in attractive end markets. But then crucially, these businesses need to have the opportunity to reinvest capital at an attractive return. And that's very much a prevailing thread through the portfolio.
Now, you've got a big weighting towards industrials and consumer discretionary. What is it that you like about those sectors?
So it's not specifically a sector bet. This is very much a portfolio built on bottom-up stock selection. So I think that's the most important thing. But having said that, you're right. And consumer discretionary makes up roughly a quarter of the portfolio, and then industrials perhaps about 30%. So they are our two largest sectors. The interesting thing I find within consumer discretionary is it's an area that is constantly changing. And so there's often opportunities to find really attractive businesses that are the future market share winners. And we've clearly got a number of those that we think are in that category. And then on the industrial side, there are some incredibly high quality businesses that are listed in the UK, which have really great positions. And we've got some good examples of those in the portfolio today that we think are going to continue to grow, notwithstanding broader concerns about the economic outlook.
Okay, what's your view on the current wave of takeovers on the UK stock market?
So this is a really interesting topic because the UK, as everyone knows, it's one of the most open markets in the world. Up and over the years, through the economic cycle, the level of takeover activity, of course, goes up and down. But actually, our part of the market, the mid caps and small caps, on average through this century, 6% per annum has been taken over. So there's always quite a lot of activity. When I see the activity that happens today, generally I look at it from a risk perspective. I think of it as a risk from a relative performance perspective. And I also think there's a risk, given how cheap some companies are, of course, that companies will be sold potentially at a price that in a few years we might regret. That being said, if or when we ever receive a bid, of course, we'll consider it on its individual merits. And of course, we have the ability to recycle any capital we receive from takeovers into new investment opportunities. But I think first and foremost, the most important thing, the fact that there are so many bids coming in, possibly underlines my point about how cheap the overall asset class is.
Now, if we get lots of takeovers and the universe of UK stocks shrinks, that's not necessarily a good thing, is it? So, do you prefer to own these companies in your portfolio now? Would you prefer to own them long term, or are you happy to sort of bank that 20 to 30% bid premium which you might get from a takeover?
Yes. So first and foremost, we care about having a deep and liquid market with a wide range of investment opportunities. And where it would really pain me would be to receive a takeover bid for a company at some sort of essentially derisory premium. Because of course, we're buying companies, and we are very much buying companies with a view to what they can achieve over the next 3, 4, 5, 10 years. We're not thinking about what price we can get for that stock tomorrow. So yes, the overall health of the markets is incredibly important, and that's why we want, of course, to see the UK as being an attractive market in which companies can invest and can list, and we want to see new companies coming to market.
Now, the FCA is eager to get more companies to list on the UK stock market and has proposed to relax the listing rules. Now, what's your view about these proposals?
So, first of all, I'm really pleased that it's top of the agenda because, as I said, the thing I care about the most is that we have a wide range of really interesting companies that are listed in the UK, and to make that to enable that to continue as it is at the moment, and then to strengthen further, we need those companies to come and list. Of course, the proposals are at a relatively early stage, so we'll see where they actually work out. But I think we're taking good first steps to be considering these options.
Now, finally, Guy, what's your outlook for the rest of the year?
So, my key gauge, I guess, of the outlook is often driven by the stock specifics. So it's very much driven by the bottom-up opportunities that we find. And we're very much in a position in the portfolio today where we're finding more opportunities to buy than we are to sell. And I think overall, that's driven by the fact that valuations in the UK are looking pretty modest, with the UK market on around 11 times earnings. But crucially, companies are delivering in line or better than expectations. And so we're actually seeing upgrades to the portfolio companies in terms of what the market's expecting their earnings to do. And in fact, on a broader basis, the UK is experiencing a macroeconomic upgrade cycle at the moment. So versus very, very low expectations, the broader UK economy is outperforming. And so if these can be sustained through this year, then I think we're set up to be for a pretty constructive rest of 2023.
Guy Anderson from the Mercantile Investment Trust, thank you very much. And thank you for watching.